Welcome to Real Estate at Work. I'm your host, Leka Devatha. Eng Taing currently runs Touzi Capital, a private equity investment firm with nearly 1,100 investors and 300 million assets under management. He has 12 years of experience investing in multifamily real estate and also owns 10 senior living communities himself. He also runs a Bitcoin mining company with deployments running on renewable energy. He's launching his first NFT called Funky NFT, a DAO project, minor DAO, and also runs a DeFi fund. Like, how is it possible to do all these things? Eng was born in a refugee camp in Thailand and is Cambodian Chinese, but grew up in Los Angeles, attended school at the University of Pennsylvania and the Wharton School of Business. He started his career in investment banking, and after the financial crisis, he joined the Peace Corps. He then had executive roles in marketing, business management, product at Riot Games, DirecTV, and AT&T. He most recently presented at Apple, where he held leadership roles on the iPhone team, Apple Music, and finally led the data science on the AI machine learning team, helping build Siri. My God, and welcome to the show. I had to go through all that because it's a lot of cool achievements. So you've attended some pretty impressive schools. Did you study with anyone famous?
I did go same time Ivanka did. We had one class together.
That's crazy. So you come from pretty humble beginnings, and that provides a different lens in which you see the world. Talk to us about that. How did that kind of shape you both personally and also professionally?
I definitely think that growing up with little, I had two overall motivations. One is I want to get more, and two, I wanted to really find sense of security. And when you don't have much, you kind of want that security, and I think that's sort of been my big motivation during my life.
Yeah, I totally get what you mean. So you worked in large tech companies, like AT&T and Apple. How and why did you pivot to real estate? Because a lot of people ask me this question. They ask me why, and like how I pivoted from my career at Nordstrom Corporate into real estate. Because, and the answer for me is easy. It's because I never had the golden handcuffs. I didn't get paid as much. I worked a lot, and it was obviously a very simple choice for me to make. But for you worked at solid tech jobs. And so what made you like switch paths?
Yeah, I think that's a great question. I did have golden handcuffs. I did leave a lot of shares of Apple at much lower prices.
Mm-hmm.
Don't want to think about it too much. You have all these visions you have. I don't know how much Bitcoin I spent at $20 a Bitcoin. It's a lot. You just put yourself in opportunities to make mistakes, and you keep doing more new mistakes. I think for me, it was about not necessarily pivoting to real estate, but really real estate has been sort of my side hustle for 12, 13 years. And I just thought that it was good timing to make it my main hustle. Not sure why I thought it was good timing when it was the middle of the pandemic, and my wife was like 4 months pregnant to leave all that. But it did, and it's worked out.
So you did start investing though back in 2012 or 2009, right?
Yeah.
Okay, so can you walk us through like what you bought back then and how that kind of helped you make that switch to real estate?
Yeah. So 2009 was sort of right after the financial crisis. I had front row seats in the financial crisis. I know this because I also booked $4 billion of subprime assets. So I was a little bit at fault. The bonus structures, they reward you to do so. Investment banking. And so I saw my net worth go down which wasn't much at the time because I just got, this investment banking analyst and associate. I cut in half in my 401k.
Wow.
I really didn't like that feeling of, things going up and down. And
Yeah.
what I saw was that real estate had a lot of great cash flow still, even though the valuation fell by a lot. In this case, I bought a 3-unit property in California, where I'm from, and it was like $126,000, put like $35,000 down, and it would cash flow it very well at like.
Wait, where in California?
So, Los Angeles.
Wow. Okay.
2009 I should have bought more. Well, I should have had more money.
Right.
Yeah. So live and learn.
Yeah.
Yes. So that was my first deal, and since then from that deal I redid the flooring, cabinets. I got new tenants, and I got a refinance 7-8 months later. Did that again, bought another property, did that again, bought another property, such, basically every year. All the meanwhile, I was in the Peace Corps, the Republic of Georgia. So I had my first thing of multifamily apartment building, managing it while I was in the Peace Corps with very little internet connection. So I set that up to manage itself, making $200 a month in Peace Corps after Russia just invaded Georgia. And then I went to worked at Riot Games before Tencent bought it, and then worked at a bunch of other companies. And just to highlight really that I've always been managing real estate investments and also working. So by the time I left Apple, I had enough passive income to offset my W-2 income, which was significant.
Wow.
So that's how I made the leap.
So, okay, so Eng said something super powerful. When he quit his W-2, which was in tech, which was a super high paying job, he had enough passive income to offset the W-2. That's incredible, Eng.
Mm-hmm. Yeah. And I do want to highlight that it's not necessarily about how much you have in passive income, because the tax treatment of that is even better. So the take-home tax treatment of your passive income should be much better than your W-2 income, especially if you live in California. And one of the things that I want to highlight is when I first had my first property, it was the feeling that it gave, the feeling of security of passive or cash flow, maybe not passive, sometimes passive, of cash flow, of monthly cash flow of income. And it gave me the ability to make bolder choices in life, different choices in life, right? I went to the Peace Corps when most of my peers went to grad school or whatever. I probably got a job at McKinsey or something. Could have had followed the same path. I was able to make bold decisions in my career as I went down the line, knowing that I had $1,000, $2,000, couple $1,000 monthly cash flow that could allow me to make these potentially bolder decisions in my career. Because that sense of, a little bit of a UBI, so this little baseline support allowed me to make these other, I think, riskier, potentially bolder decisions that allowed me to accelerate my career much, much faster.
Yeah.
So I think that's one of the things that, investing and being financially literate, having real estate investments all sort of do for you. And I think it's very critical, because when you grow up like myself or immigrant, anyone in that position of, having a lot of need or not really having a lot, you sort of want to gain security. This is why you see a lot of immigrants go towards professions, lawyers, doctors, engineers, what have you. And it seems secure, right? You have a big company name, Apple, big name. And it was a very tough discussion with my parents when I left. But one of the things that security does for you is give you I think it limits you. And
Right.
so I talked about how I've been chasing security, and that's sort of helped me have my work ethic and optimize sort of my finances. But I've also know that the sense of limitations of limited thinking, of scarcity mindset, of thinking that you have to hoard everything, you have to do everything now because this is the only chance you get, can have a lot of detrimental impact. And I think the evolution I've had over the past 2 years is really an abundance mindset expansion, and that's comes from knowing that I can do more. I can do this again and again and again, and this isn't the only deal. I'm not going to try to squeeze every nickel and dime from this deal. I'm going to do 20 of these deals. I didn't know I was going to be literally doing 30 deals in 2 years, but I done a lot in 2 years or less than that. But it's sort of a mindset that allowed me to really think that I can just continue to do more. It's not necessary that I had to take advantage of every opportunity, which gives you a little bit of a longer view of things and allowed me to make the investment decisions I've made.
Which is incredible, because I almost feel like, just reading your bio, you're always on the cutting edge of things. You're not afraid to dive into something brand new. You're not afraid to dive into something that no one else is really working on or doing. So it's really incredible to see that throughout your career, I feel like. And we're going to get into, so Eng knows a lot about, Bitcoin mining and cryptocurrency investing and NFTs and all these other cool things. And we're going to get to all of that. So make sure to stay for the entire interview, because it's going to get really enlightening. So let's go back to when you first started Touzi Capital, because you did that right in the middle of the pandemic, correct?
Mm-hmm.
Okay. So when did you start that, and what do you focus on?
I started 2 years ago, and I focused on real estate investments. I realized that I've been talking about real estate investments, and I love talking about it. I love talking about deals. And a lot of my fellow engineers or tech employees had a lot of assets, had a lot of Apple shares, done quite well in life. But that's all they had. It's hard to feel like you middle income making $500,000 a year, but that's somewhat of a effect in the Bay Area. And so it was.
And I'm in a similar market. I'm in Seattle, so I completely get what you're saying.
Yeah, it's not something I would tell anyone else. I feel like it's just making day to day, right? Like it's like this $500,000 a year is too much. Not enough, especially with kids, and but it's definitely one of those things where I realized a lot of people didn't know this stuff. I realized a lot of people didn't know about tax advantage investing, real estate, and that a lot of people have been asking me for a long time to invest with me, to participate. And it wasn't until like 2 years ago when I started to think that, okay, I think I can provide this for other people. It's a big sense of responsibility to invest other people's money. I've been investing my own money for a long time, and I do it well, I guess. And so I think just an extension of that is sort of was a natural transition for me.
So you're not like super big on social media. How are you raising capital?
Not super big in social media. It's not by intent. I have a TikTok, and I spent like trying to do TikTok. Check it out.
I'm gonna go follow you on TikTok.
I have a couple of videos that have like 2 million views.
Oh my God!
50,000 followers.
No.
I did like 7 videos, and I'm very proud to make opportunity zone investing.
Hold on 1 second. You've got to find Eng's TikTok and put it in the chat, please. That's amazing. Okay.
So I don't get any investors from TikTok, right? Or I don't know. I don't do any marketing, because I think the best marketing is really providing good value returns to investors. and providing education. And it's not that I don't think marketing can help, social media can help. I think that I just don't have time. I actually tried to start a podcast, then I followed through with that. Try to start an education platform, then follow through with that, and realized that deals and investments was taking the inordinate amount of time. You listed a bunch of stuff. I mean, I still don't know how I'm doing it.
That's amazing. So, Chris McTire had a good question when he filled out the form. He said, like, so you still buy multifamily buildings, correct?
Yep.
Still invest in multifamily. Has your underwriting changed in this macroeconomic climate? Even since you started like 2 years ago?
Yeah. Well, I think I'm being a little bit more aggressive with rent growth than I used to be, because that's the only way that I could figure out how to make these numbers work.
Right.
I've been very conservative in the past, and I've underestimated it almost always. And I think in certain markets, you're seeing double-digit rent growth continue. The last 5 years in Phoenix has been amazing.
Yeah.
In certain markets, right? It's all market specific. You get population growth, you get rent growth. I think obviously the cap rates have compressed, prices have gone up. I get outbid by $5 to $10 million in properties that I still don't understand how people are making it.
Wait, they bid $5 to $10 million over your purchase price?
Yeah.
That's insane. How
I get outbid all the time.
Wow. Okay.
Yeah, I get outbid all the time. I still don't understand. I mean, their cost of capital must be very cheap. So I need to reset my own thinking. I'm an investor. I like to invest in things that make money. And I like to really have a set target level of returns for that money, and usually double digits or better. And so I always use that mindset to make investments. And because I'm also not really a multifamily investor or a senior living investor or whatever investor, I'm an investor. Money makes money. I want to make as much money as possible,
right,
or as low effort. This is the last part. It's hard.
It's so hard. Trust me. I only do value add. And so the little effort is beyond me. Like, I don't know how people make that work.
Yeah. You're essentially in the game of construction, right? Like, or design.
Right.
And value add, it's all kind of just a business. If all these names and terminology, you're providing value and service. You're trading your time, or your people's time for a value of money. And there's certainly in financial assets like real estate, which I classify as financial asset. It's done well. It's going to do well. It's going to continue to do well until the population declines in America, which will happen for another 50 to 80 years, and unless they keep these stringent immigration rules in place. But that's I think that we're looking at sort of a investment vehicle in real estate that has different cycles, different markets as well. It's not all one market. You can buy in San Francisco, buy in LA, very different than buying in Kansas City, in Sarasota, Florida, etc. And then the different asset classes, and I have a YouTube on asset classes. Most things, multifamily, senior living, hotel, retail, mixed use, industrial, all kind of have slightly different dimensions, but they're all kind of sort of the same underlying stuff. Bitcoin mining is also kind of similar as well, if you think about it in that perspective of capital and yield.
Got it. And I want to get into that. I think, you have so much knowledge on that topic that I think it would be really fun for our audience to hear from you on that. So what we're going to do is this. We're going to take a break from this interview. I'm going to jump to introducing you to Alexis Miles. And then when we come back to Eng's interview, we're going to talk about all things crypto, metaverse, Ethereum, NFTs. So a lot of cool topics coming up. So Eng, we'll give you a 5-minute break, okay? Awesome. I am just going to spotlight. Alexis here. Okay, hold on. Alexis.
Hi.
Hi, I'm so excited we're here. Alexis and I have a good friend. You might know him, Brad St. Ange, and Brad put us in touch. And like literally instantly, Alexis and I had a call, and I was just blown away with everything she was doing. And I was like, you have to come on my show. I have to introduce you to our audience because you are amazing. All right. So Alexis is founder and CEO of the Partnership Project, a social impact investment firm focusing on real estate development and wealth management. To date, the company has acquired over 50 vacant lots, and collaborated with the communities they operate in to design and get site approval to build senior housing units and affordable housing condos. Alexis, I'd love to hear, like, what is your primary investment strategy in your words? Because it just blew me away.
Yes, thank you so much. I'm so grateful for the opportunity to be here. And so my primary investment strategy is typically to invest in vacant land in underserved communities. So we focus more specifically on qualified opportunity zones. And yeah, so vacant land, I do invest in, some existing structures, but I would say 95% of my portfolio is vacant land.
That's amazing because Eng also invests in opportunity zones, and you guys both are focused on senior living, which is one of my like near and dear topics. So, and asset classes. So I commend you on that. So why do you invest in such close proximity to you? Because most of your land that you own is right by you, right?
Absolutely. Yeah. So this is for a lot of reasons. From a management perspective, it makes it a lot easier to have property in close proximity. But also our group focuses on whole neighborhood community redevelopment projects. And so I had mentioned that, we invest in underserved communities. So when you're going into a neighborhood that's underserved and, is lacking a lot of infrastructure things, it's, they need a lot of things. And so, for example, the neighborhood is a food desert. They're lacking healthy food, lacking some safety and security, greenery, senior housing, affordable housing,
right,
housing. So by acquiring a lot of sites within close proximity, it allowed us to really get creative and, master plan the community, design all of the different asset classes that the community needs, and just make sure that as we're implementing our plan, that the people within the community are able to, eventually have access to a better quality of life and better conditions. And so when we went back to the drawing board and really, we're looking to identify what does this neighborhood need, it made it so much easier for us to implement that because we had so many sites within the community.
Okay, so let's go to that. You said that you acquired all these lots. Can you give us some numbers on what prices did you acquire these lots for? What resources did the lots already have?
Yeah, absolutely. So the vacant land, so we focus on a neighborhood in North Philadelphia. The neighborhood is called Tioga. It's adjacent to Temple University Health Sciences campus. So when we went into the community, we saw, a tremendous amount of value that, the community had because it was adjacent to a hospital, a university. It had a lot of infrastructure already there. However, 75% of the community was vacant. It was extremely underserved. The median income was $17,000, very high poverty, and a lot of health disparities. And so, when we were going into the community, it was just, very, very important that we were acquiring a different range of size of sites. And so that was something that was of tremendous value. We were able to go in and acquire sites that did have public utilities, but again, it was vacant land. And the properties ranged between 1,500 square feet to 14,000 square feet. And price points, I think that the cheapest property that I acquired was for $1,600. It was
what? Wait, what?
I know. So keep in mind, underserved community. You're talking about like very, bad conditions. And so a lot of times when you're investing in underserved communities, the properties are very, very devalued. But it's in no way a reflection of the true value. These neighborhoods are gold mines for so many reasons. And so, $1,600. So we started doing acquisitions in this community in 2014. So we've been investing in the neighborhood for a very long time. The price points, on average, were closer to 10, 15, 20,000 on the early side of our acquisitions. And of course, as time went on, the prices continued to increase. And so our strategy was to go in, gain a significant amount of site control, and then we do value add as well. So we secured multifamily zoning variances on the sites, and we actually got the sites permitted for a higher and better use. And that was typically, just more density. We needed approvals for more density. We needed approvals for some amenities like roof decks, maybe, an approval for more lot coverage to be able to build to cover more of the land, which then allowed us to have more density. So it was, the price points were definitely low because of the conditions of the community. But also we were really creative with our acquisition strategy. I mean, we went to sheriff sales, we sent out letters, to current owners. Like, we weren't just buying stuff that was on the market. We were buying off-market deals, and we were able to, acquire a lot at scale because we were able to articulate to the sellers that we were rebuilding the whole neighborhood. And so we found actually that they were excited to sell the properties. A lot of the people were in a position where they, just couldn't move forward with developing the sites, or they just, they wanted to, sell and make some money. And so to know that we were actually going to do something positive with the sites, it assisted us with getting a lot of deals done. Like, people understood, we're not just doing this to make money. We have a whole community redevelopment plan, and our goal is for the neighborhood and for the people to be better.
So tell me this. So the lots that you bought for 1,500 back in, 4 or 5 years ago, what are those lots worth today with the zoning variances that you have gotten?
Yeah, so the site that we acquired for $1,500 was a 3,000 square foot lot, and we got by right, we could do one single family house on that lot, and got an approval for 4 condos. And so
wow.
Typically, yeah. And so basically the way that we did that is we went to the community and we said, look, it's just not feasible for us to build a 5,000 square foot house in this community. Right. We would have to sell the house for, $800,000-$900,000. And, it's just not feasible. And so what we want to do is break this, 5,000 square foot building up into 4 affordable condos. So we're still going to provide home ownership, but the units are going to be, 1,500 square feet. We're going to have roof decks, we're going to have a homeowners association. So they understood, like, there was value in what we were proposing. It made sense. So those sites, typically the sites that we have gotten a 4-unit approval on, appraisals have come in between $150,000 and $165,000, depending on the size of the lot.
Wow. Okay. That's incredible. So basically, you were able to buy a lot for 1,500, change the zoning and the variance. Obviously, you have a killer plan in place because you are increasing density, but those today are worth 150 grand. Now, that's a strategy. How can new investors get started on something like this?
Yeah, absolutely. So the way that I really got into the industry was through relationships. So it's a family business that I operate. I work with my father, I work with my uncle, aunts, lots of different family members. And it was really just the exposure. And so what I recommend is that you align yourself with experts in the industry. If you want to build, a massive portfolio, or you're looking to, build some cash flow, and really build the foundation to prepare for retirement or to build generational wealth, you have to align yourself with people that have built that foundation, or people that are, actively doing what it is that you want to do. I think that just mitigates so much risk by aligning yourself with someone that has that proof of concept and that, has a track record of success. And then also it allows you, they can then share their lessons and the things that they've learned, so you don't have to go through that same thing.
I'm so impressed with you. That's a really cool strategy, not one that I've heard many people use before. And so I'm excited to see how you progress. I'm excited to see these communities come together. And just thank you so much for joining us today. You're such a wealth of knowledge and inspiration, and for all other women, especially women of color, and everything that you do for them. So I really appreciate you.
Thank you. I appreciate you as well. This is amazing, and I'm grateful to be here. I'll go ahead and link my contact information again. I would love to connect with you guys. Thank you.
And then can you also put a link to the partnership project? Because I think that's a really cool place for people to go and get more information and see really what you're up to.
Absolutely. Thank you.
Awesome. All right. Okay, back to Eng. Let me add you back. All right, give me a second here. So I'm personally really excited, Eng, to talk about all things crypto, because I don't have much information knowledge. I don't invest in crypto, and I'd love to change my mind or know how to do that the right way after this conversation. So no pressure. Okay, so we do have a lot of techies that join this meetup or watch it on YouTube after, that are deep into crypto investing. But we also have a lot of real estate investors that are brand new to this space. So if we can, quickly go through just Bitcoin crypto investing 101, what would you say? Very high level view.
So Bitcoin is, did I explain Bitcoin? Yeah, no, it's a digital asset, and it's really, in my view, the closest potential representation of digital gold, and it's all codified in code. If you think about what makes any asset, any money, it should have certain characteristics. Those characteristics include a medium of exchange, right? You should be able to exchange it so that you can, sort of why money exists, so that we don't have to barter anymore, and I don't have to trade 3/4 of my donkey for your 10 chickens, because that doesn't make sense since how many things you have, or my my apartment building for those 3 condos, and that's how we barter it. And it can't be, so it can be indivisible units in pennies, satoshis, whatever you want to call them, essentially atomic units that you can exchange. So that's one of the characteristics. The second characteristic of money, I gotta remember my economics days. I am a trained economist. Is a store of value, and a store of value is very important if you think about inflation, that degrades a value of anything. And when you start seeing, if you study the history of money or history of economies, it's very fascinating history, because that really dictates the history of empires. When you see what has precipitated the fall of empires, it's always been about closely tied to a over inflationary policy of monetary printing or monetary oversupply in one form or the other. In the Roman days, the dinars, I'm using the wrong word, using a lot of, trying to get back in time here. They started to, it was gold coins they had. They started to chip the coins. They had started to mean that they were putting less gold into and still representing it as sort of a gold coin. Nero introduced that in the late 4th century, and don't correct me if I'm wrong, if you're a historian. And that sort of precipitated sort of a less trustful nature of that coin or that currency.
Right.
And so if you have hyperinflation or inflation in general, that means that you can't trust the dollars, the pesos that you're making. And so as a long-term thinker, you can't think long-term at all. You have to spend it today, otherwise it'll be worth half of much tomorrow. That's what's happening, you know, in sometimes in Venezuela, sometimes in Zimbabwe, right? Yep. This is what hyperinflation looks like. Now, 8% CPI print in terms of inflation. We probably been taught that cash sucks, that you should not hold as much cash as possible. And so having a store value is very important. And what I love about Bitcoin specifically is that it's a finite store value. There can only be 21 million Bitcoin. This is a codified in code, a digital code that cannot be changed. That means you can't print, there's no Federal Reserve printing trillions of dollars. Bitcoin will only have 21 million, and there will only be 19 million. There's only 19 million mined or found right now, with 2 million to go. And it'll take you another.
Let me just stop you there. Why is there only 21 million Bitcoin? Can you go into that for a second?
That's how it's designed. It was designed with that specific number in mind, and it was designed to slowly be introduced to the world economy as currency, as some people call it. Although I think calling things cryptocurrencies is a misnomer. And miners will mine Bitcoin to secure the network, to essentially mine the remaining 2 million Bitcoin over 120 years. And every 4 years, there will be half as much Bitcoin mined, which is to say that it would be twice as difficult, which means that if you're mining Bitcoin, it just gets harder and harder every 4 years, which also means that usually prices go up and up. It's very related to effort and costs. That's a little synopsis.
Okay, so let's talk about that. Let's talk about, you know, you have Bitcoin mining centers across the US. What does that Bitcoin mining process look like? Can you run us also through the economics of mining?
Yeah, so Bitcoin mining essentially is a bunch of computers. We call them ASICs, application-specific integrated circuits, which essentially are made for one thing, which is to mine Bitcoin. And they take a lot of power. So and that power, the energy, translates into Bitcoin. So it's a pretty good translation, because at certain prices of power, it costs $10,000 to make one Bitcoin. I would love who wouldn't love to buy Bitcoin at $10,000?
$1,000, yeah.
Yeah, so we mine close to 2 Bitcoin a day at $10,000 each, and we're ramping up production. And you know, Bitcoin mining essentially is I think of it very much like real estate. It's a productive asset. It creates a daily revenue stream in this case, and you need to be located near very high power, cheap power sources, and with larger scale, industrial scale of capital and data centers and containers, whatever you want to use. You get better costs and better, lower variable costs. So your cost to mine is lower and lower, and you get depreciation. So those miners are computers, which you can write off in year 1. And so we get very large depreciation benefit. So love that for real estate.
Right.
Yeah, so I think it has lots of very cool characteristics that are very related to real estate.
How much power do you think this requires?
It requires a lot of power,
Yeah.
but it depends on like, so I have 50 solar panels on my house and I have somewhat of a big house. I don't use all of it. But if I didn't use anything else, I could probably plug in like 5 computers.
Wow.
And so it takes a lot of power, and they're building power plants. You know, you probably hear news stories of Bitcoin mining using more power than the whole country of Argentina, whole country of Sweden, Denmark, whatever you want to.
That's crazy.
Yeah.
So there's a Bitcoin mining network, correct?
Yeah.
Can you talk to us about the value of the network?
Yeah. So this goes into sort of Bitcoin in general, sort of what is Bitcoin? What is the value of blockchain, the ledger? The value is really that this is a digital representation of potentially of a unit of Bitcoin in this case. If I send you 1 Bitcoin, the ledger will automatically deduct 1 Bitcoin from my public ledger, meaning that people can see exactly how much, and then how much you have, 1 plus. And that transaction is validated by miners, by computers. It's like think of it like the Visa network. You swipe a card, there's a central bank that takes a cut, Visa takes a cut, and you know, you then transfer money from one to another. And if the computer is down, then you can get hacked, cannot do all that stuff. In the blockchain, you can do that, send money to one person to another, and it can never be hacked as long as at least 1 computer is running in the validated network. So these miners are really just validating the transactions. And as Bitcoin becomes a more bigger part of how we use currencies or money, I believe that it will also gain in that transaction fee.
So interesting. Let's switch gears, talk about Ethereum for a second. Can you explain to us, like, what are smart contracts?
Smart contract is essentially just a coded way to create an if-then function, right? If you give me $100,000, I will give you this house. And right now we do that with an escrow and a intermediary, and a smart contract bypasses all of that. It just creates a transaction layer. If this happens, and then this will happen. And we all both have to agree that this will have to happen first, and then we will then put our stakes involved. And if that doesn't happen and we don't both sign off on it, then that later. So it's a smart contract is what I think is a smarter way to transact in a trustless society, in a digital society, right? Us not knowing each other or whatever. This is how I think future of transactions will happen.
So Ethereum versus Bitcoin, like, which one's better according to you?
I don't think it's a right comparison, Ethereum versus Bitcoin. I love Ethereum. I have 6,000 NFTs. It's a lot. How about them in Ethereum? Okay. I have a lot of Bored Apes that have been doing well, as you can imagine. Ethereum is a technology application. It is the app store. It is completely different than what Bitcoin. It's a governance token. Ethereum is a governance token. It is mining. It has proof of work mining. It will go to proof of stake. It has certain characteristics that are very similar, like all cryptocurrencies, to Bitcoin, but Bitcoin is very different. It's dumb. It's slow. Maybe not slow. It's kind of is really, really hard to change. It's very impossible to change. It's a dinosaur, as people call it. But that's why people love it. Institutional investors love it. That's why institutional money is pouring into it. Billions and billions of dollars. $1.5 billion a month in Bitcoin mining is done in revenue. But by the way, Ethereum mining makes more. It makes like $1.7 billion a month. Shouldn't sell my GPUs.
I know. Wow, this is incredible. where do you see the future of Bitcoin, Ethereum? Like, where do you see that future going?
I see the future of Bitcoin being a third nexus of multipolar world. For a long time, since the Bretton Woods Agreement in the mid 1900s, when the U.S. dollar was held as the central reserve currency of the world.
Yeah.
At peace among itself. Russia invaded Ukraine. There is a multipolar world emerging. One being the dollar, second being the RMB, the yuan. The Chinese and the Americans will clash in economic forces. But there's a third neutral option, as people can ban SWIFT, ban their own version of payment systems, and be targeted in central authority governments. All governments want control. Bitcoin creates an unleashing of that control. And I believe that the third nexus will create, led by Bitcoin, dominated by Bitcoin currency, will basically be the currency of a lot of different countries, a lot of smaller countries, a lot of unaligned countries. And I think that for a lot of independent thinkers, it would also be a lot of people speculate Bitcoin will be this and this and that. I'm not necessarily a speculator.
Yeah.
If that was the case, I would have kept all my Bitcoin when I bought it in 2012, 13. Yeah, it's a lot of Bitcoin. So, but it's one of those things where I do have a long-term fundamental belief that, in a scarce finite asset with further adoption, you will just see, just like real estate, scarce finite asset, land, with growing population, right? You have supply outstripping demand.
Right.
And in the case of Bitcoin, that will be the same case. So I don't see it unreasonable to have 7-figure Bitcoin in the next 10 years.
Ooh, amazing. I want to touch on the metaverse. So virtual real estate and metaverse is a new buzzword these days. Do you think that virtual real estate, like in the form of NFTs, will become more valuable or widely used in the future?
I think so, yes. I think if people create digital worlds, digital representations of worlds, people will always find parts of that valuable, right? If you're living 24, if you're living like 18 hours, 16 hours a day in the virtual world, and you live sleeping 8 hours a day in your real world, then you value virtual world more. How much of us are value our digital representation of our social media accounts? How much would you pay for a blue check mark? Is that not digital real estate? These are all digital real estates and representation. So if you create a world that people want to be part of, a community that people want to be part of, then there will always be social status and gainings in that world. People are people, regardless if in the digital world or in the real world. People want status and power. And you do that by having more of something than the others. And certain characteristics of real estate provides that. Certain characteristics of digital real estate provide that. Certain characteristics of having a blue check mark or whatever it is. You can start more than that. Provides that. So.
But, so why does virtual real estate have value if you can just keep creating more, right? Like one of the perks, I think, of owning real estate is that it takes time to add new housing units.
Yeah, I think that it's all about consensus. Everything is valued at consensus. If I value Bitcoin at $2, I will never buy Bitcoin for a long time. If everyone values Bitcoin at $5, then it'll go down to $5 potentially. And same thing happens in real estate. There's obviously a utility element with real estate, but if we just valued real estate on utility, the value of real estate would be a lot less. It's a lot of speculations. A lot of it as a store of value. Real estate is one of the best store of values for a lot of people, hundreds of millions of people, because that's mostly what they have. It's like the only thing they have in some cases as the only savings account. So I don't believe a 30-year fixed mortgage is a great idea or having a mortgage is a great idea. If you're not a credit investor, you're not access to all these other investment sources, then putting money down in your house is a pretty good savings account.
Right.
And so digital real estate, if you think that it can be replicated many, many, many times, then shouldn't have value. Yes. But in any metaverse world, you can create fixed supply and you can do it in code, and people will trust you as much as they can. But if it's in code, and it's why I like Web3, crypto, a lot of it is like publicly sourced code that people can transparently see, and they can see that this will be a fixed supply. But Ethereum was actually started by Vitalik. He's in his early 20s now, he's a billionaire. And he started Ethereum because he played World of Warcraft, a digital world of an MMORPG, massively multiple online role-playing game. I used to play it in college.
Wow.
And I spent hours and hours in college, doing this quest. I was in the auction system. I was always hustling and buying and selling stuff I mine. This in this case, digital representations of copper, whatever it is, and making money off it, and then trading that into a currency on eBay or whatever it is.
Oh my God.
But what happened to Vitalik and happened to lots of people is Blizzard, the founders of World of Warcraft, they changed the rules of the game. They took away his items, and we started a refresh, right? That lack of control, lack of property rights in any country. We had a digital. I'm going very meta on all of this. Lack of property rights is the foundation for any strong economy. If you don't have property rights, if somebody can just change the rules, can change the game, corruption, et cetera, then you won't make any actual investments. You won't think long term. You can't actually trust that this won't be taken. And so Vitalik basically built Ethereum on the notion that I don't want these goddamn game developers to take my magical sword. So I'm going to create something where you own it. So Axie Infinity is a multi-billion-dollar revenue generating game where it's built on Ethereum Foundation, and sort of the same concept that you can actually create a world, you can play in the world, and you own every aspect of the world, and it cannot be changed in the code. And so that digital ownership represents something valuable. As I went on a long tangent, but I think if you're really thinking about these things as I can just copy paste this NFT, I can do this and this, that, then you should also think about all the other things you could do in art. What is art? What is Andy Warhol painting? All these things are these tech games. They are.
It's such a fascinating new world, and so much to learn, and I'm really glad that we can reach out to you as a community and gain knowledge on this. Okay, before we go further, Dan Spafford is here. Dan is our resident photographer, and he's just going to take a quick photo of the meetup. If you have camera, please turn it on so we can see your pretty faces, and then we can take a quick photo, and then you can go back to hiding.
Hey, by the way, Leka, it's Don, not Dan. You offended me now, so I don't know if I feel like this.
Don.
All right, here we get the cameras on that wants to be on, and we'll do it in three count of three, I guess. Here we go. So you want on, get on here. 1, 2, 3. All righty, we're good.
Awesome, thank you.
Yep.
So I want to end with, talking about funky NFT and what you think the future of NFTs are.
Future of NFTs is future product.
Yeah.
It's a big definition, and Facebook changing to Meta is one part of it. Apple is a very big consumer product developer. I think almost all future products would be NFTs. And NFTs is used in many different things, but basically it's a smart contract. It's a smart contract that defines a way to fundraise, to have membership, to have clubs, to have tickets. Imagine having a ticket to the Lakers game, and that this can be memorialized, and you say, hey, I went to this Kobe Bryant game or whatever game, and I have the NFT to prove it. I have a digital representation authenticated to prove it. Or imagine that you want to build a stadium or a theater and you want funding, and you can sell lifetime passes of NFT, and now people will buy the NFT. And then every time you want to sell that ticket to somebody else, you will make money 5%, 10%. These are in the contract. I could list this house as an NFT, and then every time it sells again and again, I could make 1%, 2%, 3% by the contract. And so there's so many use cases of NFTs. I think we're all just sort of just imagining it now and creating it now. Funky NFT is just sort of my little pet project. It's just one of the use cases. But it's definitely, it's a very interesting future that we will live in soon.
That is amazing. So one of the other questions that we got was, how does a beginner invest $1,000 to $5,000 in crypto?
Beginner invest $1,000 to $5,000. Probably open an exchange account, which I don't love.
Okay.
It depends on how much time you have. If you have the time, you should definitely look into getting into actually on-chain, which is essentially going to the centralized exchange and off these Coinbase and Kraken and that stuff. But if to be honest, you probably just go on Coinbase or Robinhood or whatever, buy top 5 coins, Ethereum, Solana, Bitcoin, Luna. These are all coins I like long term. Not sexy. You're not doing anything. You're not staking it. You're not earning yield on it. These are all things you could do in DeFi, which can make like 50, 100%, 2,000% APYs, insane stuff. But I don't think we have much time for that.
I know, I could just keep you here and talk about it all day long, right? Okay, so before we open it up to audience Q&A, I want to ask you this one last question. What is the one piece of advice you can leave us with? Something that you picked up, along your own wealth journey?
I think it's all about I feel like it's being flexible.
Yeah. I love that. I say that all the time.
Yeah. You can use many words besides flexibility, but being like adaptable, whatever it is. Change is on a constant. And if you're expecting to do one thing, if I'm expecting to be in art NFTs in next year, I don't know if that's gonna be a thing. But I know that understanding smart contracts and understanding the characteristics of learning new things in general will always be valuable in the future. Learning is great. Always learn. And so being flexible and being dynamic with the market has always helped me understand what opportunities arise and not be too static and fixed on one thing. Obviously, there's so much value in fixing and being static and scaling that expertise, but being dynamic with the market and flexible is, I think it has served me very well.
I love that. Thank you so much for all the wisdom that you shared with us. And I'm really impressed with our audience too. They're all mostly real estate investors. So I think it's cool that you guys stuck around to listen to Eng and have to hear everything that he said. Okay, so we're going to open it up to audience Q&A. I want to start with Nitra. Where are you? You can unmute and ask your question.
Hi, so I was just wondering, locally, I know here, I see people accepting Bitcoin as payment, but for vehicles, do we think that someday we might be able to buy real estate with Bitcoin? How does everyone feel about that? What do you think?
You can, I think you can certainly buy real estate with Bitcoin now. It depends on who's receiving it, right? If somebody really likes Bitcoin, or if somebody knows how to sell that Bitcoin right away for cash, which I could literally, you send me one Bitcoin, I could turn that into $41,000 right now. in effect, it's actually much easier than waiting for your bank account to clear ACH via transactions. I think buying stuff with real Bitcoin is actually a very interesting topic.
Yeah.
For selling Bitcoin, if I have a lot of Bitcoin, or potentially I want to have more, what would I want to do with that? Would I want to sell it and get hit with the capital gains tax? I don't know if I would want to. What would you do when you have real estate? You kind of want to do a HELOC or a cash out refi, right? Guess what? You can do that same thing with Bitcoin. You can leverage Bitcoin. If I have $1 million of Bitcoin, maybe it's just one Bitcoin. No, I can take 70% LTV on it, and that's 70% dollars, and not have a tax hit. I've definitely done that, and that's so I think the tax code actually classifies Bitcoin as a property, so it's mostly taxed like a real estate property. So it's very interesting characteristics that we'll see in the future come together.
That's awesome. Any other audience questions? This is your turn to ask Eng.
Hey, Eng, who's funding the leverage of Bitcoin? Is that typical institutions or is there private lenders?
It's typically institutional capital, and they make the money off of essentially providing. So it's a bank, right? And that's what DeFi is, decentralized finance. What characteristics does a bank do? It lends money, it borrows money, it pays yield, and it takes risks and then takes the risk spread premium. And so when you want to earn 10% returns on your stablecoin, which is cryptocurrency, or on your Bitcoin, you can then deposit into one of these institutions, and then they will go out and lend it to someone like myself or whoever who wants to do maybe a margin trade or whatever. And they make the money off liquidation. So the other part is that, when you go underwater in your real estate, no one's going to liquidate you as long as you pay your monthly payments. In crypto, they will liquidate you in the second that it goes to a LTV that it's not where you want it to be. And if it's 70%, that means that if you borrowed 70% of the value of the crypto and the crypto goes down by even 1%, then they'll liquidate that little 1% or that 70% to cover that little difference to get you to equilibrium. And so that's how they make the money. So it's usually institutional investors. There's probably close to $30-40 billion leveraged out in crypto. It used to be more. And I think it will continue to be more going forward.
Awesome, thanks.
Drew?
Yeah, I had a question. This is something I've been doing some light reading on, and I've just started kind of looking into more. But is there, with kind of the future of specifically cryptocurrencies, is there any regulation in America specifically that we should kind of be keeping our eyes out on how the government may look at regulating Bitcoin in the future? Just because I know there are so many advantages to using it, I could imagine it being something that the government would want to get control over a bit, but I'm not super versed.
There's a lot of regulations that probably need to happen in the cryptocurrency space, and regulations come in two forms. One is protecting people, or at least sort of the notion of protecting people, and two, having control and taxing, right? If there's a market economy that creates trillions of dollars of value, the government wants a piece of it. They want to tax it. They want to regulate it. And if there are people being hurt, or being scammed, being rug pulled, whatever you want to call it, with crypto, then the government wants to protect you. That's SEC law. That's why there's investor laws, dumbass laws that really prevent people that don't have the means or the historical wealth to gain access to great investment opportunities. I think that will probably be something that the SEC will look into going more and more forward, because lots of cryptocurrencies violate that rule a lot. In terms of a regulation I think the Biden administration is looking at it closely. I don't any regulations I feel that will happen will likely be sort of in the favor of institutional investors. And I almost always just advise people follow the money. If there's a lot of money flowing into one space and it's a lot of big money, deep pocketed monies, they have a lot more lobbyists than I do. I will ride the coattails. And
Randy?
Hi. So yeah, this is something that I'm actually really interested in. I've been learning a lot about it, kind of messing with NFTs a little bit here and there. Can you kind of just break down what the startup costs look like when you're creating a mining facility, whether that be Bitcoin or Ethereum, whatever it is? Like, what does it look like to go out, buy the land for a place, put a structure, and put your equipment in there?
You're probably not getting good scale unless you're spending $1 million, probably more. You can probably plug in one miner in your dorm room if you have free electricity, or your apartment building if you have free electricity, because electricity is going to be your biggest cost, right? You're running profit margins of 70%. 30% of that cost comes from mostly electricity costs. If you're running it in a residential building, it's going to be like 60% expense. So you want industrial scale, industrial pricing. And I get, pricing that usually is 1/3 the cost of what I would pay in my house in California. And at that point, your cost to mine Bitcoin is like $30,000. Still less than buying Bitcoin, but not very good. And so startup cost is definitely, high. Also, that's a barrier to entry. It's in institutional investing at this scale, right? This is why big money is coming in. And that's why I'm doing what I'm doing, just sort of allowing investors to invest with us and get Bitcoin at the same scale that those guys get.
Thank you. Appreciate the info.
I should have asked you this right in the beginning, but what is the cost of one Bitcoin today?
Today, it's 41,000.
Yeah, crazy. We're going to end a little early today, but it's been amazing having all of you on here. And Don Spafford is going to take us out.
I am. All right. Well, thanks everybody for once again coming to Leka's awesome meetup. This was definitely very exciting for me and for everybody, because this was something outside of real estate. A lot of time spent on crypto, which is pretty exciting for everybody right now. So this was very informative and very awesome. So thanks, Leka, always for doing this, and everybody for being here.
Awesome, guys. Thank you, Don.
Thank you.